guys, this is yours Parag. Today I'm gonna explain what is classification of accounts. In commerce stream there are lot of crooked tales. Today I'm gonna teach you what is the classification accounts and what is the personal account and what is the impersonal accounts and real accounts and nominal accounts. So in the accounts classification, there are two types of accounts. One is personal account and second one is impersonal account. Personal account deals with the persons, entities, and businesses. The real account deals with assets, and the nominal account deals with expenses and incomes. In the personal account, we will debit the receiver and credit the giver as per double entry bookkeeping system. So, the double entry bookkeeping system tells you about in every transaction there will be another transaction. Let's move on to impersonal account. Impersonal account again classified into two types. In real account we will debit when the asset comes into the business, and vice versa we will credit when the asset is going out. Let's move on to the nominal account. In nominal account we will debit all the expenses and losses, and vice versa we will credit incomes and gains. Personal account deals with the accounts of a person or an entity. You will ask me why entity is a personal account. Because we have given name to the particular entity, so it is established by law. So it is called as artificial person. Real account. Real account deals with the all asset. It may be current asset or a fixed asset. It may be a bills also. So here are some sample transactions. Let's see how we're gonna show this in double entry method. All you need to do is we have to find two items in every transaction. So in this paid into bank 1000 rupees transaction, we can find bank and payment. Payment through cash. Bank is one item and the cash is second item. Bank is a personal account because it is a artificial person. Cash is a real account. So let's see how it goes. So we have paid 1000 rupees to bank. So the entry will be bank account debtor to cash account. Bank is the receiver. As you see, personal account method. In personal account, we will debit the receiver and credit the giver. So we have paid 1000 rupees into bank. So bank receiving our 1000 rupees and cash. Cash is a real account. Real account rule. As per real account rule, debit what comes in, credit what goes out. So bank receiving 1000 rupees and our 1000 rupees is going out of the business. So this is the transaction. Let's see the second transaction. Purchased a machinery worth 1 lakh. So here the two items are, one is machinery and the another one is cash. Machinery is a real account and the cash is also real account. So the entry will be machinery account debtor to cash account. Why? Because as per real account deals with all the assets. We will debit what the asset comes in. As you see, machinery was debited and credit what goes out. Cash is also asset. Which asset? Cash is current asset. So we have credit the cash account. So machinery is coming, cash is going. And let's see the third transaction. Ramesh purchased goods worth 1000 rupees. So Ramesh purchased goods from us worth 1000 rupees. So Ramesh account debtor to cash account. Sales. Sorry, not cash, sales. So Ramesh was purchased goods from us worth 1000 rupees. Ramesh account debtor to sales. As per personal account rule, debit the receiver. Ramesh is receiving the goods and sales. Sales means income. As per personal account rule, Ramesh is receiving the goods. So Ramesh is the receiver, debit the receiver. Sales is a nominal account. Why we have credited the sales? Because sales is an income for us. So as you can see, nominal account rule, debit all the expenses and losses, credit all the incomes and gains. So as you can see, we have credited the sales. Let's move on to the fourth transaction. Sale of goods worth 500. So the transaction would be cash account debtor to sales. In this entry, cash will be debited because cash is coming, and the sales will be credited because the sales is income. You can find the difference between these two transactions. The third transaction is credit transaction, and the fourth transaction is cash transaction. So I will explain why the third transaction is credit transaction. In the transaction, if they mentioned any name instead of cash, so it will be credit transaction. In the fourth transaction, they have not mentioned any name, so this is cash transaction. So here it will goes like these are just a sample transaction. For more such kind of journal entries and problems, do check out the description. Okay, this is yours Bharat signing off.